Hello, I'm Alan Kohler, founder of Eureka Report, finance presenter on ABC News and a columnist for the New Daily.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey and shareholder activist.
And we are the Money Café
in an unnamed
Camberwell. In Camberwell.
Once only Camberwell Cafe as we shop around for a new permanent home for the Money Café.
Have you ever lived in Camberwell?
I spent 11 months living in Camberwell in 2003-04, renting in our sort of crazy crikey days after losing our house with defamation and having 3 kids in 3 years, and we were sort of running around. So we rented this lovely place in Murdoch Street, Camberwell, just up the road from here, which I think was, I suspect was actually named after the Murdoch family because Rupert's grandfather was the minister at the Trinity Presbyterian Church just up the road here in Camberwell, and Rupert's father, Sir Keith, whilst living in that manse in Camberwell, got his first job as the Malvern reporter for The Age newspaper in 1903.
The Age had a Malvern reporter.
Back in the day, you had suburban beats based on a single postcode, and Keith Murdoch, Malvern correspondent for The Age, 1903. And overnight, his grandson, Lachlan Murdoch, has just chaired his first Fox Corp AGM at 3 o'clock this morning, our time, in the Fox Studios lot in Los Angeles. So they've come a long way over 121 years from Camberwell churches to running the world from Fox Studios in LA.
Did you participate in the Fox News annual meeting at 3 a.m?
No, because unfortunately they ran it as a physical meeting. So my last physical meeting was the day after Trump got elected in 2016 when I flew in, had 12 hours on the ground, did both their meetings, News Corp and Fox Corp, and flew out. So I couldn't attend, but I was impressed that it was a 16-minute meeting, and Lachlan Murdoch's got even tougher than his father on questions. Rupert used to allow 2 questions over 2 minutes, and Lachlan this morning introduced you're allowed 1 question over 1 minute for the whole meeting. So they had 1 question from 1 shareholder, and it was all wrapped up in 16
Do you know what
minutes.
the question was?
Oh, thanks for the buyback and Tubi's going well. And, just a nothing question. So where are all the Democrat activists saying Fox News is a disgrace? You've delivered us
They're
Trump.
not allowed. Well, they're not allowed in.
They can't buy in because you have to register at the nearby Westfield parking lot, get through security, and then you've got to jump on the company bus and take you in there. So they've got shutting out shareholders to an absolute art form. So tomorrow morning it's the News Corp AGM.
And are you going to participate in that?
I'm trying to. It's a virtual meeting, okay? So, but they keep putting barriers in the way. I think I've missed it again. So I registered 2 weeks ago because they said you've got to register online and they gave you a pass. And then yesterday I got an email saying you've got to enter your security pass by 5 p.m. on November the 18th to actually get into the meeting. And I've missed that deadline. So they've created a 2-stage registration process. So I think I'm going to be locked out of the News Corp AGM at 7 a.m. tomorrow, where I was going to ask my usual 2 questions because they banned it to 2 questions. So these free speech warriors who run Fox News are very, very restrictive when it comes to free speech from their own shareholders.
Yes, indeed. Nothing new about that. So what sort of annual meetings have you been doing?
Just one last thing on Fox Corp. I just want to say the numbers are incredible that Lachlan read out this morning. They've done $5.9 billion US in buybacks since the Disney sale. They've bought back 29% of the total company. And this year, they had $14 billion of revenue and $3 billion in operating profit. And this latest quarter, $1 billion US in operating profit thanks to record political advertising on Fox News and redistribution agreements. So the Murdochs are making a fortune from Fox News. They're bigger, better, and more profitable than ever, being the chief propagandists for the Republicans and Trump. And on the stage with Lachlan this morning was, guess who? Paul Ryan on the stage, former US presidential House Speaker.
What was he doing there?
And Prime Minister Tony Abbott, as Lachlan introduced him. So he's still the Prime Minister. He wasn't former Prime Minister, he was on the stage with me here in Los Angeles, said Lachlan 4 hours ago, is House Speaker Paul Ryan and Prime Minister Tony Abbott. So I get the Americans hanging onto their titles, but I didn't know the Australians got to hang onto their titles. So well done, Tony. Didn't say a word, but would have enjoyed the 16-minute meeting and no debate.
Jeez. Well, and meanwhile in Nevada, Reno, Nevada, of course, they're trying to preserve Fox's position as the Republicans' mouthpiece. And we don't know yet how that's going.
It's a secret trial for control of the Murdoch Trust and control of Fox News, effectively. And, managing chaotic Trump for the next 4 years. I mean, that's going to be, as we said last time we spoke, Alan, great time for journalists, great time for the media. Unless they get locked up, of course, in America. But so much analysis and what's going to happen. And so let's do a bit of that. What's your overall picture now of Trump, markets? What's it mean?
Well, the turning point for me was the appointment of Matt Gaetz as Attorney General. Yeah. I mean, up to that point, I thought, maybe he'll kind of be a relatively normal president, maybe. But putting this bloke, Matt Gaetz, in charge as Attorney General, in charge of the Department of Justice, makes it perfectly clear that he's basically just a bomb thrower, Trump, and is going to use the Department of Justice to go after his enemies. So I think that really kind of raises the stakes for the US. Obviously the appointment of that Fox News presenter as Defence Minister, Tulsi Gabbard as head of intelligence when she is suspected to be a Russian asset. I mean, all these people are going to basically are there to break the system. And it's interesting because Trump won 31% of the vote. And this is the 31% of the total
population because of the
adult
no-show
voting
from no compulsory voting.
38% of people didn't vote. 31% voted for Trump. 30% voted for Kamala Harris. And the 31% was basically the reverse of what happened in 2020.
Yeah.
So basically what happened was...
the anti-incumbent vote just flipped. So Biden won with an anti-incumbent vote
by 2%.
And it's flipped now.
So there was a shift of 2% in the population, and that's going to change the country, completely change the country. With that mandate of an extra 2%, Trump is going to blow the place up.
Yeah. See, I'm not a subscriber to the system is gone, blow up. I think the checks and balances will kick in. The Republican Party senators won't confirm Matt Gaetz. They won't confirm the Russian assets. Mitch McConnell's already said we're not doing recess appointments. I think checks and balances will kick in.
I understand that, and that's a solid,
and the markets think
solid
that too
point of view.
The markets think that too at the moment.
But the thing is, what's happened is that Trump's made his intentions clear, right?
So he's a bomb thrower, wants to drain the swamp. Yeah, he is maximum pissing off every critic he hates.
If it's not Matt Gaetz, it'll be someone like him. I mean, Trump has made his intentions perfectly clear.
Yeah.
Right. So,
but the other issue is when these people get power, do they actually have the energy and the smarts to use it, or is Matt Gaetz going to be just focusing on wild bunga parties? Like the old Italian Prime Minister used to do. So, is he actually going to have the strength and the energy and the motivation to actually use the power, or is it just a prestige thing and everyone hates me and I'm going to pontificate?
This is not individuals. This is a whole gang of people.
But they're not a coordinated gang, Alan. Half of them are libertarians. Half of them are Christian conservatives. The donors don't agree with the voters. The billionaire donors will slow Trump down.
They're coordinated through Project 2025. Come on. You know that.
Who's ever signed it? I can tell you, Alan, when you get elected, you promise a whole bunch of stuff and then the system totally changes you because half the stuff you said you're going to do is not realistic. But he's been there before. That's the scariest thing. So he knows the system. And he's got a second crack at it.
Sure.
And he's appointing crazier people. So, look, I agree it's scary. I'm just not being a total doomsday person on what he will actually do. Although I'm nervous about Ukraine right now with all the escalations and the Americans effectively trying to finish off Putin before Trump gets in. That's a very escalating and scary situation right now, I reckon.
Right. Okay. I don't know.
I'm trying to weave Trump questions into AGMs every day. So yesterday I went to De Grey Mining, a gold miner. They've got a big deposit up in WA. They're worth $3 billion. what does the chairman think about Trump's embrace of crypto? Is this going to undermine the gold price? Shouldn't you be arguing for Trump to build the US gold reserves, not produce competing crypto reserves?
What's the answer?
I'm not going to comment on Trump, so that was hopeless from De Grey Mining, but the whole meeting was absolutely hopeless. And I don't know what the answer was yet at Sonic Healthcare, the big sort of US, they've got a big US pathology business. But I threw in the, what do you think about this crazy anti-vaxxer running the health department? Robert Kennedy, are you scared this is going to hurt our health business? So I'm loving throwing in Trump questions into every AGM. And at the end of the day, no one has any idea. We're all just watching and trying to work it out as we go, as I suspect Trump is doing as well.
How many AGMs did you do yesterday?
Oh, I did 9 yesterday, actually, which was a record for a day. So I got up to 140 for the year.
That was a personal best.
Personal best yesterday, 9 for the day. So ResiMac Generation Development Group, which is the old Ausdoc run by Grant Hackett, the swimmer, is the CEO. So I lobbed a couple of questions about Grant Hackett. He's a very determined young man. I can see how he was winning 1,500-metre gold medals. You've got to have a certain level of determination to be able to do that.
You certainly do.
So he's kicking goals. That company, BlueScope Steel, I did them in Wollongong, and I love them. I thank them because they agreed to my request for extra voting disclosure. So they revealed for the first time that only 1,600 of their 66,000 shareholders voted, and how they voted, so you could see the fors and against. So that's where it's going. Computershare have done that as well. So love BlueScope, love Seek. I went to Seek yesterday. Andrew Bassett, the founder, he gives the most humble re-election speech. Look, I'm here as long as Ian Narev, the CEO, thinks I'm useful, but I'll go if I'm not very useful. But I've got a bit of corporate memory, so look, you can vote for me if you like. I've still got more than half my wealth in the company. Some people think that's a problem, and I have to sort of say, no, Andrew, it's not a problem. It just means you're not independent. It's a great thing, but you're just not an independent director, mate. So I love the Seek meeting. I got a bullseye with the... I've got a new question on the audit. So the question was, we've had PwC as the auditor for 20 years. How many tenders have we run over the last 20 years? And when are we doing the next tender? So that's a question designed to flush out long-term cosy audit relationships. You know what the response was from Graham, the chair? He said, well, actually, we had a board meeting this morning and we've decided to tender the audit this morning.
Beautiful.
So I thought, isn't that lovely that
instant gratification.
PwC gets told they've been sacked
That's
at the
great.
AGM in response to a question before they've even been told after the board meeting. So
excellent.
Yeah, so that was all good fun.
So just before we move to questions, I just want to deal with interest rates because the RBA's minutes came out yesterday. Continues to pour cold water on the idea of rate cuts. There'll be no rate cuts this year at all. And the market's now predicting 2 rate cuts next year instead of 4. And I think that's potential. 2 rate cuts is also potentially optimistic.
Is this global market discipline against Trumpism, reckless fiscal policies and inflation, potentially? Because interest rates in the US, it's a similar story, isn't it, of reduced expectations of cuts, inflation fears rise.
The economic impact of Trump is a bit hard to predict because if he actually puts in the tariffs that he's proposing, that will crash the economy, but extending the tax cuts beyond 2025 will boost the economy. So there'll be kind of stimulus, fiscal stimulus and fiscal contraction going on at the same time, and who knows which of those will win. But as for Australia, the problem is that the labour market remains tight. The unemployment rate is still 4.1%. I mean, the Reserve Bank wants it to be 4.5% at least. And so, in my view, they won't cut rates until unemployment rises, which is possible. I mean, there's a fair chance that will happen, but it hasn't happened yet.
This is the thing I sort of struggle with anti-incumbency and it's the economy stupid. I mean, it's full employment everywhere. Like, you can get a job. It's a different type of economic pain. It's an inflation pain and it's a wealth pain.
That's right.
And it's an inequality pain.
It is not
an uncertainty pain.
That's right. It's not unemployment. It's a really interesting distinction with previous problems.
Yeah, and it's an asset bubble pain, as in the housing asset bubble. People can't afford a house, even though there's no problems getting a job. But the job's not going to deliver you a house, so you're angry and you're throwing out incumbents everywhere.
Yeah, that's right.
It's an amazing time. So, anyway.
Before we get to the questions, let's have a quick word from our sponsor.
In the world of investing, 10 years is a huge milestone. 3 of InvestSMART's ETF portfolios have recently reached this mark with style, outperforming most competitive funds along the way. To celebrate, InvestSMART is giving $100 to every new account opened and funded in November. With 10 expertly designed ETF portfolios from conservative to high growth and asset-specific options like international shares, you'll easily find a portfolio to suit your goals. Visit investsmart.com.au to learn more. Remember, past performance isn't a promise of future success. Terms and conditions apply.
Now, Alan, I guess first we're dealing with a correction. Stephen has written in pointing out that I have totally misconstrued the way ETFs work, and Stephen, I agree. And I guess we should just spell it out precisely. The way that ETFs work is they're very different from listed investment companies because there is a market maker system that ensures the ETF trades very, very closely to the fundamental value of the assets that they are backed by.
Correct. You don't get premiums and discounts with ETFs.
Correct.
So Stephen is right and Stephen is wrong.
Correct. Well said, Steve. Well spotted, Stephen. And I will buy my first ETF one day so that I know something about them. But they just don't have enough AGMs. They're not fun. There's no chairman of the ETF board who you can go and harass. So that's why I've never got into them.
Yeah, well, you just have to ignore them, mate.
Well, stop talking about them if you don't know anything about them. They're correct. So David says, it's my understanding that the Big Four accounting firms are not currently required to submit consolidated financial reports to ASIC and are therefore not searchable. Do you know if this is correct and it's reasonable?
Well, it's because they're partnerships, right?
Yeah, that's right. So it is correct that the Big Four accounting firms do not put in a PwC Australia or PwC Global just did this and has assets worth that. But David's trying to say this is a dastardly terrible thing, and I would just simply come back and David and say there are some other sectors or institutions which benefit from the same thing, namely political parties, churches, the ACTU unions. I mean, if the ACTU put out a balance sheet, it would show that they've got net assets of all their affiliated unions of couple of $1 billion. If the Catholic Church put out a consolidated balance sheet, you'd see $100 billion of assets, but you never see it because they're all distributed into their branches and different divisions and don't have to consolidate. And partnerships are often run by the different state or territory, the Sydney versus the Melbourne.
I wonder what value the Catholic Church would put on the support of God, as an intangible asset. I imagine there's very few intangible assets that are worth more than that.
Well, I think it's very important.
You probably don't want to get into that, do you?
No, I won't go there. But I will say that if the Catholic Church did produce a consolidated balance sheet showing their $100 billion plus in net assets, I think that the outrageous tax exemptions from property, from councils to land tax to stamp, you name it, churches don't pay hardly any property taxes, which is why they've got all these lazy, underperforming assets, property assets sitting all over the country because there's no pressure on them to push for a highest and best use and make the assets sweat because there's no penalty for holding the damn thing.
Yes. Okay, fair enough. Okay, next question is from Judith. Is it credible for ASX 200 companies to run a hybrid or virtual AGM on Zoom, or do they need to be with two big share registry outfits, Computershare and Link, with their purpose-built integrated meeting and voting platforms? You would know all about this, Stephen.
Yes. So look, I am a fan of the Computershare and Link platforms because they are purpose-built for the AGM, and you can go in and vote and ask questions and listen and watch good quality video all on the one platform. All these companies that do Zoom, you have to log into a different platform to go and vote. So you're literally at the meeting running two platforms. You've got to log into Atomic or log into Computershare or Link. So yes. So, message to, De Grey Mining yesterday, $3.3 billion company. don't muck around on Zoom. You're a big company. Just get with the program and hire one of the big boys to deliver you a professional hybrid AGM. And from my experience, with the drop-down box, you can pick the resolution that you're asking your question on. I find that they're good. But the worst offenders are the people who don't do online at all. And even just today, I'll just give you an example of there's so many companies. From Charter Hall, for instance, today is Downer Group, Abacus Property, Worley, Netwealth, and Emeco are all running physical AGMs today. So they're not offering voting online, they're not offering online questions, so they're the worst offenders. So just anyone who gets online, great job, but my preference would be to go for the big Link or Computershare systems, because Computershare started by a Templestowe boy, Chris Morris, Manningham boy, now worth 17 billion, world's biggest share registry company. There is no other global share registry company. What a story. And they are now doing early disclosure of proxies, and they're doing how many shareholders voted as well. So they're not only the world's biggest and best share registry company, but they are practicing best practice treatment of retail shareholders at their AGM. So I've become an unabashed fan of Templestowe-founded, Manningham-founded Computershare. How's that for an unpaid ad, hey?
That's fantastic. Nathaniel says, I'm interested to hear your thoughts on the role that cooperatives play in the Australian economy. For example, CBH Group is the largest grain exporter in the country with a surplus of $353.3 million in 2023. It is also a cooperative that is democratically run and where the profits are reinvested into the company and its members. Should cooperatives play a more prominent role in the Australian economy as an alternative model for structuring private enterprises, companies and the workplace more generally? Well, I think we're just in furious agreement with you, Nathaniel, but go on. Stephen, what do you think?
It's a good concept because it's owned by the customers, but as someone who, I think our family, eventually got paid about $1 million by the RACV, a mutual, which a certain Paula Piccinini got elected to the board of and served for 10 years. Mutuals are ownerless because the customers don't act as shareholders. So you're in the hands of the board and management, and too often they do get captured. So that's the problem with mutuals, is you don't have the big shareholder who can ring up and demand better governance. And so the industry funds, they're sort of run by the unions and the employer groups, and people say they should be turned into mutuals, so they're owned by their members. But if that did happen, the members actually would never take charge and run it, because you can't organise 1 million Aussie super members to get anything done. And so, I like it as a concept, but I do like the AFL clubs, for instance, are not-for-profits. They're not really mutuals as such, but they're not-for-profits.
And I don't think what Nathaniel's talking about, cooperatives, are exactly the same as mutuals. Cooperatives.
But Fonterra is the world's biggest dairy cooperative for dairy farmers.
No, but I think the story is that a cooperative is owned by the suppliers.
Well,
whereas a mutual is owned by the customers. No.
Yeah.
A cooperative
is owned by the suppliers. You're right. That's right.
That's right.
Yeah.
So I think that a cooperative is a slightly different thing. So a dairy cooperative is owned by the dairy farmers who supply the milk into it, and I think that's fine though, because there's not that tends not to be that many of them.
You do tend to get governance issues with agriculture cooperatives, like AWB. Effectively, the farmers had a gerrymander over the board, and then they slipped Saddam Hussein $300 million in bribes, and you had the massive Iraqi bribes scandal, and then the government took away the farmer cooperative power because they mismanaged it. Fonterra, I went to their AGM this week. They're the world's biggest dairy farmers cooperative. They were censoring my questions, not answering it. Their governance was poor. And they've also just announced they're quitting the ASX because the ASX is charging them too many fees. But the shareholders in Fonterra, so I bought $500 worth of shares, non-voting unit trusts, blah, blah, blah. So it's fake equity, because the farmers run everything, and you just get to have the privilege of giving them capital to run their empire.
Yeah, right.
But the idea of giving you a vote and respecting your rights as a shareholder, well, sod that. And now they're not even going to let me trade my Fonterra shares on the ASX because they want to save $500,000 in listing fees. So I don't like governance at cooperatives because there's too many conflicts of interest to preserve their interests and not the other interests of people dealing with them. Sorry about that, Alan. That was quite a rave one. Now, Bert says, the last time I asked James Thompson a question about bonds, and this time I'm a regular listener to the FT podcast Unhedged. That's the Financial Times, the UK AFR. They did a really interesting podcast on 13 November when they talked about mandation. Alan, could you explain mandation in layperson terms? What do you think about it, and do you think this is something that could happen in Australia? If it is a new system, why isn't there at least some discussion about it in Australia until this moment? Over to you, Alan. Mandation, what is it all about?
Well, mandation, the word mandation is simply the noun of the verb to mandate. And mandate, of course, is also a noun as well as a verb. But mandation is clearly a noun, and it refers to a thing that is mandated. And in this context, what Unhedged was talking about was basically telling super funds where to invest their money. So a mandate imposed on pension funds that in return for their tax credit, they have to invest in certain things, right?
Yeah.
Now, Australia did have that kind of mandation in the past with what was called the 30-20 rule. And that was for pension funds in the old days. This is before the superannuation system was set up. The pension funds that existed, in return for their tax credit, they had to invest 30% of their assets in government securities, of which 20% had to be in federal government securities.
Yeah, so we'll give you a tax break if you finance the government.
That's right. And so that was a mandation that existed. It was abolished by the Keating government prior to them setting up the superannuation system. The superannuation funds do not have any mandation in Australia, even though they get a really good tax break.
And they fight it. Like anyone says, you should build affordable housing to save the nation's housing crisis. And it all comes back to fiduciary duties to maximise the returns for members.
And so there's often a debate sort of flares up every now and again about whether the super funds in Australia should be investing in national projects of some sort, whether it's affordable housing or infrastructure or something. And it usually just dies because they oppose it.
Well, when they set up the Future Fund, the whole debate there was, do you limit the amount they can invest offshore? So do you force them to be patriotic as the national sovereign fund? It's not really a sovereign fund, it's a past fund for past federal government pension liabilities, but Costello always misnamed it as a sovereign wealth fund. And that debate was had, and they ended up getting no rules whatsoever. So they could go 100% foreign. And that's why they've got a tiny allocation to Australian equities, because they weren't mandated to back Australian companies, and they've outperformed over the long term because they've gone private equity, foreign.
Yeah.
And so it's been a very good decision not to mandate the Future Fund to be patriotic, and they've delivered fantastic returns and reduced the government's liability to all those retired defence workers.
It's interesting. I had dinner with someone last night who said that Australian Future, this super fund, he was talking to somebody at one of the biggest super funds in Australia, and this super fund was investing in Norwegian affordable housing as opposed to Australian affordable housing, because any offshore investments by super funds in Australia are not regulated in terms of the asset allocation. But local investments are regulated in terms of asset allocation, and the asset allocation of their property portfolios is restricted largely to commercial real estate, retail, office and warehouse, and the amount that they're allowed to put into housing is incredibly small.
Yeah.
So, and I didn't realise this. I'm going to follow this up, but there is kind of asset allocation guidelines on Australian super funds, but they appear to be not the sort we want. They're not actually mandated to invest in anything in particular that is good for society. They're just
make as much money as you can.
Well, the mandates.
Can they buy crypto? Would be my question, because I asked at the Platinum AGM.
I doubt it.
The Platinum AGM, I said Trump's talking up crypto. Crypto's booming. What do we think of crypto, and are we buying in?
What they say.
And they said it's not in our mandates.
Yeah.
We're not allowed to. We promise our clients we will only invest in equities.
The mandate the Platinum is talking about is what's in their constitution.
So they promise their investors in their funds.
Yeah, that's right. So they create their own mandate, and then they have to follow that. But some of a lot of the mandates that the super funds have imposed on them have to do with asset allocation, which has to do with risk.
Diversity
and the minimisation of risk, as opposed to national projects or what the country wants, what the country needs.
If you were mandating the super funds to do anything, what would you tweak? Do you think there's a affordable housing argument or a renewable energy climate argument that you would support?
Well, yeah, but the problem with affordable housing is that it would genuinely reduce the returns of super funds.
Yeah.
Because by definition, affordable housing is cheap, and therefore the returns are low.
Yeah.
And so I think it's a really big issue. The questioner is highlighting the fact that they're having a discussion, an argument about this in the UK at the moment about mandation of pension funds, and I suspect it'll go nowhere because it can never be really agreed on whose interest should be served. Is it the members' interest that should be served, or is it the national interest?
It's increasingly important with super funds. Super now at 3.9 trillion. It is actually becoming important. I mean, James Thompson, when you were moving house, Alan, he last pod, he was talking about how these industry funds are becoming huge institutions that are so economically influential, and it is right. So if you force all that money into those structures, it is a legitimate question about where you require them to invest.
It's interesting to think about the 30-20 rule, which is the old mandation. That was all about investing in government securities, right? So the idea was the government gives you a tax break, you have to invest in the government that's giving you the tax break, right? But so a lot of the discussion about mandation these days is to do with putting something into a national project, not the actual government, but buying or investing in toll roads or investing in affordable housing, which is not the same thing as investing in the government. It's interesting.
Now, Phil says, we've probably got time for the one last one, I think. Phil says, I'd love to know how much of Australia's inflation can be tied to small business pricing. My wife and I run small businesses with a handful of staff, and like many others, we've had to raise prices to cover rising costs and maintain our lifestyle as interest rates go up. Given the growth in small business employment, could rate hikes currently actually be indirectly fueling inflation by pushing up small business costs and forcing small business to push prices up?
Well, what it's doing mostly is forcing small businesses out of business.
Correct, because it's trying to slow the economy.
Because small businesses don't usually have pricing power. They don't get to put their prices up in response to rising costs because they're being competed out of business.
Correct.
They're competed
That's right.
by big companies.
Yeah.
And so what we're seeing, and I'm going to have a graph of this on the news tonight, so you can...
Scoop, folks.
No, it's not a scoop. I'm just saying that I will have a
7:15 p.m, don't miss it.
Of insolvencies, corporate insolvencies in Australia are at a record high.
But we're booming, Alan. It doesn't make sense. Big business is booming, little guys are battling.
That's right. The little small companies are struggling because costs are rising and they have no pricing power, so they can't put the prices up.
Whereas meanwhile, big tech booms like never before as Microsoft forces through massive price increases on customers all over the world. And
well, that's right. So these tech
companies, inequality and the power imbalances between big and small business, I think, is an increasingly important issue.
And these tech companies can charge what they like. I mean, Nvidia's chips, AI chips, they can basically charge them what they like.
Yeah.
There's no competition.
Well, look at all those booming stocks yesterday. Xero, REA. I mean, REA's got close to a monopoly over real estate agents, and anyone selling a property has to deal with REA. WiseTech's back booming again. I mean, if you're a global logistics company, you pretty much have to deal with WiseTech. So, yeah.
How much of a buy was WiseTech when it crashed?
Honestly, I bought my 5 at 100. I've already sold a couple, I think, because they've gone back up to 130 or something. So their AGM's coming up this week, Alan. You know what WiseTech needs? WiseTech needs the Ian Narev equivalent at Seek. They need to find a really smart person to come in as CEO, replace the founder, but get on well with the founder. So if someone's out there who can be a CEO of WiseTech and be accepted by the founder, but tick all the governance boxes and be a really brilliant IT person, that is what the WiseTech directors have to source. Whereas at Mineral Resources, the other billionaire controversial AGM this week, they all need to be sacked.
All of them.
Whole board.
Sacked a lot of them.
Top management team. They've got great hard assets. So it's not a WiseTech situation. They've got great hard assets. Anyone could run them. It's a mining company. So out with everyone at Mineral Resources. Chris Ellison's only got 10%. He's not in control like Richard White's stake is closer to 30%. He's in control.
It turns out with Chris Ellison, the tax evasion was just the tip of the iceberg.
That's right. It's a very Perth 1980s situation. Lots of personalities involved. So I reckon we're done, Alan.
Personalities. Did you say personalities?
Yes,
I love that.
I used that yesterday. The personalities who are very colourful.
Colourful personalities.
Look
I love
after
it.
themselves. We're bringing back the 1980s at the moment in Perth.
Well, thanks everyone for listening to today's episode of the Money Café. I hope you enjoyed it. I'll be back next week with James Thompson. Send in your question to the Money Café at eurekareport.com.au. Until then, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor.
And I'm Stephen Mayne, and we'll see you in a fortnight.